right, here we go. That's
Oh,
still
wow. Here we go.
Some things don't change.
Very cool.
They've been doing that since the 30s.
Wow, I've never had that before. That's great. I feel very important now. Thanks, Alex. Welcome to Banking to Go by Algebra Labs. Your takeaway insights from the world of financial technology and banking. Served by industry leaders. I'm Martin Muller, your host for today's episode, in which we will dive into the complex and important topic of financial inclusion. Today's guest is Bob Annibale, a pioneer and leader in financial inclusion, celebrated by the likes of the Obama administration and the Financial Times, among others. Bob, thank you so much for joining us here. Really good to see you again.
It's great to see you and happy to be here. Thank you.
So look, I think you are a pioneer in the financial inclusion space. You've been working at it for a long time now, dare I say, from many perspectives: academic, governmental, non-governmental, corporate, every continent, maybe aside from Antarctica. What does financial inclusion mean to you? And has that perhaps changed over time, space?
Yeah, it's been a long journey. I mean, you're giving away my age, but my engagement with it's been, it was an early period when we looked at the role of people in terms of how they get access to any financial services. And we realized the majority of people in most countries in the world outside the most developed weren't getting access to formal financial services. And some real leading players were coming up with very innovative ways of providing that. It began with a movement called microcredit.
Yeah.
And people like now the Nobel laureate Muhammad Yunus, Professor Yunus in Bangladesh and India and places, that began providing very small loans, particularly to women, for their own use of small business and eventually even consumption loans later on. But it was driven at the beginning by credit, access to credit. I think what we realized over time was people really needed access also to other services. And so we started to call it then, microfinance, then financial inclusion, because we really were talking about savings as well. And today, very often, people will even talk about financial health and the tools that help people to manage their financial lives, whether for work or savings, emergencies, or for building a business or buying a home. And so, I've been a part of that journey over many years, and it's transformed the way we do that.
Very cool. And so what would you then say is the difference between, so you have your microfinance, which is a very particular service, or your credit aspect, which is very particular. And then you're moving into the broader aspect of financial inclusion, which is other products and services getting embedded. Would you say that's correct?
Yeah.
And then finally, financial health. What is financial health? What's the next stage?
I mean, financial health is a term that's being used, and it's a broad term, but it really means understanding the full financial life of an individual or a family, and trying to say, how does your family function in terms of its income, its savings, perhaps insurance, maybe there's remittances. Very often I would say the lower the income of a household, the higher the velocity of transactions, because people are always turning over what they have and managing very closely, but very often with few tools, many tools that we take for granted in terms of being able to save money, transact money, transfer money, pay bills, or even, borrow if we want to for different purposes. So I think as we move forward, we start to listen to an individual as a client, and you understand, well, what are the other needs they have? And how can those be sometimes delivered by, maybe by one delivery partner, but very often they're produced by multiple, because most financial institutions have their areas of expertise, which is true in anybody's, whether you're in the UK or the US or India. And many of those services are provided by insurance companies, remittance payment. But fintechs have become a new player in many ways, connecting the dots.
Cool. There's a lot to unpack there, and I'd love to get into that in a little bit as well. Just to go back to basics and just think about, well, I'm curious to know, why did you decide to dedicate so much of your career to financial inclusion? Why is it so important? Why does it excite you?
My career was in the conventional way of global financial services and treasury, investment banking, whatever, living in London, Athens, Bahrain, Nairobi, New York. I was very happy. I was working on things I liked, but I was increasingly, having always begun my studies in the areas of Africa and the Middle East, I was always aware that I was going to countries and working on issues that were really interesting, but like 95% of the country didn't seem to have any access. It wasn't just the minority, which is the case in the US or the UK or Europe. It was the majority. And over time, I was familiar with these countries or markets, and I just felt like I was working with NGOs, nonprofits. Very often they were drawing on me for technical and specific financial questions. I realized that I actually was more driven by that than what my day job was. And so I sort of was going to step out of my day job. And the management at that time at Citibank, where I was, many colleagues at that level thought it was kind of crazy to give up this route. But I said I would love to start something new, being what people called me then an entrepreneur. I didn't really know what that was, but it didn't sound rude, so it was okay. I set up a business within a big business. And ironically, the people who were senior who helped me do that, people like Stan Fisher, who became, he's been the head of economics at MIT, and he was the head of economics at the World Bank. Ajay Banga, who today is the president of the World Bank, they were my colleagues, senior colleagues. And I set up a group at Citi that I could apply my skills, my familiarity globally in many ways with local markets, local currencies, local law, with the needs of individuals that I couldn't go the last mile and serve. But I knew people who could. And the reality was I had to sell to a big financial institution that there are small ones, very specialized, but they're amazing. And they may be nonprofit or they may even become for-profit. But they understood the needs of these segments of the population, and we should support them and serve them as institutional clients, because that's what they needed.
I think this point around the collaboration is something that we're seeing more and more, maybe especially with fintechs as well coming into the scene. Just broadly, I mean, we're all aware how important fintech has been in driving financial inclusion. I think the figures are something over the past decade, 2.5 billion unbanked to 1.4 billion, a lot of progress, still a lot to do. What else has been the role of fintechs in financial inclusion, outside of just addressing the unbanked, but also maybe in other ways? What comes to mind?
Yeah, I mean, if I go back 10 years or so, and fintechs were still, what we call fintechs as though they were, ubiquitous. They were really just an odd term. We didn't know what to call them. And, I was on investment committees, and I'd been at the World Bank and at Accion and other groups that invest today in fintechs. But what first people would say to me, but aren't you threatened by them? The big banks must be worried about these fintechs. I said, they were actually not at all. First of all, they're enablers. They're very different expertise and capacity and balance sheets and outreach. And what we realized was there was all this energy and innovation coming because they were nimble. They were startups. I mean, the vast majority don't survive, or they transform into a new idea, a new business perhaps. But those innovations that come with smaller financial institutions very often can partner and enable a bigger institution to go much deeper at a cost base that it couldn't do with this traditional model, right? Most banks, they're legacy institutions. They're like me. I still have a landline at home. I have a phone, and all my apartments, I have telephones.
And an Apple Watch, though, as well.
Yeah. That was given to me by one of my staff who said, you have a swatch only. You deserve something which I don't know how to use most of the functions.
Do you use payments with it as well?
No, I'm not.
No, you're not there. Okay.
But I have it on my phone. So that was a big step. But, I was a legacy. I was well served. Right? I had my phones, I had my mobile, I had my credit cards and debit cards. So all these innovations, I adapt. In many ways, I'm a slow on taker of them because I don't have a lot of gaps in my daily life financially, in the tools. But the reality is, somebody younger, they leapfrog it. They don't bother waiting to get a landline, a regular phone, before they get a mobile. They don't want to go to a bank branch in the old traditional sense very often if it's going to cost them more. And they actually want to be able to do it as much as they can, within their own time and their own convenience. So I think what the fintechs have allowed us to do is have much wider outreach at a lower operating cost than the model the banks have, which were really built on sort of conforming client segments that they'd been working with for years.
It does also seem that a lot of these, banks, as you mentioned, you were, maybe a prototype customer, and you've had access to financial services a long time. Others haven't had that privilege, and now I think we're seeing. So, I mean, maybe you can enlighten me a little bit on this, but I'm always baffled when I go into a supermarket. You have the paradox of choice. You get there and there's 200 different types of yogurts, right? You've got your fat-frees, your organics, your strawberries, a combination of those, XYZ oats, you know the drill. There's so much. But when it comes to financial service, it's something that touches our lives on a day-to-day basis multiple times. And it's something that is so central to how we function as individuals and how society operates. Financial services have and kind of still do continue to be quite standardized and offering perhaps services to an assumed homogeneous population, which is more like maybe yourself or me. Do you think that there is a lot of opportunity right now and a need to kind of go beyond that? And what role might, fintech have in serving these specific needs, whether it's context-related stuff to climate change, or whether it's around gender equity, or whether it's around faith-based requirements? What is the next stage in this financial inclusion
I think financial
journey?
services are, have always been a slow mover in many ways, partly because they're so heavily regulated. That's not a bad thing, but it's very heavily regulated. I'm just joined the board of a bank in the UK, a small bank, and it's the amount of regulation, when you can see better when you're at a smaller institution than if you're at a big one, where there are big units dealing with all those issues. It's very heavy. And so they very often have moved slower. And they've tried to maximize returns on their existing clients or clients or institutions that are familiar and, their competitors have. And I think the difference with the fintechs is it's allowing you to go a lot faster and to synthesize this. Just the way you probably have lots of apps on your phone, you don't have to go to multiple places to get information. You can jump around. And with AI, probably some of those apps will think for you and, come up with these connections even faster. But I think most of us want to be able to, it depends. Like you say, go to a supermarket. People would like to find a lot of their services at least brought to them together. They may be manufactured by different firms. So, those people who are lending institutions may be different than those licensed for saving. And certainly they're different for insurance. But that doesn't mean that you can't understand the financial life of an individual or a family and then bring those services together on a common platform. And I think that's what fintech has been so clever at doing. It may have a lead product, but more important than that, it's thought about how to deliver that. And that's really taken banks a lot longer to do.
Yeah, I think, this whole discussion around, going, I think, beyond just simple access also raises, I think, a really important point that financial inclusion is more than just access, and financial exclusion is caused more by than just poverty. You mentioned before, a lot of it does happen, what we would refer to here as over there, a lot in emerging markets, developing economies. But in our backyard here in the UK, a highly developed economy, also renowned for its financial system. When we did our research, a bit of a shameless self-plug here, I think, on the lifestyles and values banking, we found that you could conservatively estimate that 16% of the UK's population was financially overlooked. And now those are people that we would classify as not having their needs met. So that can be around disability, that can be around sexuality, faith, and so on and so forth.
I mean, that's very true in America too. I mean, the FDIC, the major depository insurer, their regulator, I was on their board, advisory board for many years. The number of people who are underserved and unbanked is the term they use.
Yeah.
And it's not even about banking anymore. It is about being underserved. And I think that's very true. And many people are not being served with products that were intentional for them. Sometimes those that were very intentional could have been predatory. And we've seen that in credit. That there's been predatory lenders, and that's really unfortunate. But as we look at people's financial lives better, we need to understand their needs and who can address those needs best. Financial, as you say, access is just the first step, right? It's sort of like many people talk to me about, we can pass many laws to give people, rights and empower, but do you really empower them? Do they have the resources to avail of those benefits? In some cases, they don't have the assets. So you can say, well, this is available, but how do I build savings? How do I, and that makes other areas, need to be addressed too. Of course, housing, education, jobs, employment, because financial services is sometimes a connection. We're just tools in that plumbing. We can't, in its own right, necessarily generate income or equality, but we can give equal access to an appropriate services. That's empowering.
I think that's a really, really important point you raised there. It's really about, sometimes money is just something that can feel a little bit, scary to some, but it's something that we all deal with, and it's, like I was referring to earlier, it's a cornerstone of society. And I think just financial inclusion is an enabler of 7 of the 17 SDGs, right? Around gender equity, around economic growth, around inequality, even climate change adaptation. If you're providing financial services, that are created to meet the needs of agricultural labor in, the developing South, who are now more at risk of climate change and need specific sustainability-linked insurance products or so on. And I think this is something that is, maybe missed at times, is just how important finance is in creating a more equitable and sustainable society for all. And the role that finance plays in that, I think, is maybe something that is a little bit overlooked. It's beyond, money that moves in the account, but it's really about what it enables behind the scenes.
And it's very, without that, you're really on the outside. And, in the most extreme examples in places like the UK or elsewhere, you can have anybody who cannot access. You can't go to some cafes and pay with cash anymore, right? There are places you can't go without a card or your phone to tap, because they've come out of the cash economy completely. But we leave many people behind, and that could be the elderly. Those are certainly immigrants, and and those who are newest to our communities. Very often it's youth at the beginning of their careers and journeys. I think all of that can be addressed. What needs to be done otherwise in the financial lives of a person or their health is their broader, services. But sometimes we can connect with those services. Maybe we can bring down the cost. We can bring down the friction of somebody getting benefits or making a payment or getting paid, and bring down that cost. Because for somebody on a low income particularly, they really juggle. I would say, not that people don't know what to do or they're spending their money more badly. They're really juggling and making economic decisions all the time. What do I pay for first? What if I pay late costs me more? I often look at people building financial identity, I call it. If you look at somebody who hasn't got a credit score, they can't do anything. You can only get a prepaid phone. Because when somebody runs your name in the system, they're either going to give you credit, which is what a phone contract is, or you try to rent an apartment and you have no credit history. I noticed this when I went back to New York to rent an apartment after living abroad for so long. And I had a senior role between New York and London. And they ran my credit report. I was curious because I hadn't lived there for so long. And she said, "Oh, you have a thin file." I said, "What's that mean?" I said, "That's probably good. I don't have any bad thing in my file, right?" She goes, "It doesn't mean you have much. There's almost nothing on you." And that just meant I really hadn't been active on the formal economy in the US in terms of borrowing money. Because your credit score, your credit history is only based on debt. It doesn't matter how rich you are. It doesn't ever look at your asset. It looks at what's the behavior and your history of making repayments. So if you haven't been doing that, she said, "Oh, you should just take out a loan." "But what for? I don't want a loan." She said, "You build your credit score." What I've learned, though, is helping people to build their credit scores really matters, and helping them repair it when they've had issues, particularly in the States, medical bills and things cause people to get in arrears. Many people in their lives, in their youth for sure, make a mistake, and before you know it, it's gone to their credit score. How do you help people to understand the importance of building a financial identity? Because without that, you'll always pay more. You'll pay more for your phone, you'll pay more for a mortgage, you'll pay more if you're able to get one. And so...
just a lack of opportunity as well, right?
And cost.
Yeah. It's like if you look at, I think I don't remember the statistic exactly, but you're reminding me of, I think African women, so from Africa, I'm not sure about expats, but they were by a factor of, a crazy factor, by a factor of for something the most entrepreneurial demographic in the world.
Right.
But it's very difficult
There's no
to,
history.
well, this is it, yeah. So it's very, if you're, who in the UK can start a business from cash savings?
No.
Hardly, yeah. And then to expect that to happen in developing economies is even more.
I mean, we in a developed economy like the U.S., where I work on the board of Grameen America, based on the Bangladesh example, it's the fastest, the largest lender, micro lender to women. But 90-odd% of our women are immigrants. They have like no credit score. They don't have a bad score. They basically just don't exist in the credit system, and we don't care. We don't use that to make a decision on lending, but we monitor it. And we report their repayments because it allows them suddenly to have a rising credit score. It gives her choice if she wants to go somewhere else to borrow money, or she wants to get a contract for a mobile phone, or buy a sofa, on one of these contracts from your supermarket, your department stores, where it's, you can pay over 12 months and not be a predatory loan.
Yeah, I think
to
that's
take the advantage we would get when people have a promotion. But she, or I, or anybody, we need a credit, we need an identity, a financial identity. And that's where, when you look at people's financial lives, and fintechs can help bring these pieces together, it's about helping people to build them.
People being overlooked and unbanked, and that's something that they don't want. But then a strange thing that we see as well is, many people not actually appearing to want to be part of the system. And based on our discussion, I think it might become a little bit more clear as to why that is, because it doesn't necessarily always seem like it has your back, and there are moments of predation, and there are moments of exclusion of certain community groups and not meeting their needs. So making access is one thing, but if it's not meaningful to you, there's no point in having it in the first place if it doesn't actually serve what it needs to serve. So reflecting on that, I think society as a whole, and also from developed economies, I think in the UK we recently came across a stat in the office which was like 80% of the UK's population doesn't want to speak about their finances, for example. I think we just generally have quite a bad relationship with the financial system, right? There's not much trust in the system. We don't know much about it. Financial literacy here in the UK as well, it's very, very low. It's a taboo to speak about as well. I mean, how important is, just changing our very relationship with finance more generally, given how central it is to our lives?
I mean, there's been a lot of loss of trust, or there's been little effort to build trust. And as you lose high street banks and you lose the presence and, or the immediacy of someone to speak to, it makes it even harder. Also, I don't think many efforts been made around language. The reality that people, this is, in some cultures, it's in the British, I think, as an American, British are particularly cautious about talking about money. Americans don't mind so much. And other countries, that can be the same. There could be, many nuances that need to be built in. That's where partnering with local institutions really matter. And that's where fintechs can work across geographies, but very often with an institution that has trust and is familiar to people. Because as you said, you go to a supermarket and you see many brands, you kind of gravitate to the ones you knew. There's somehow you understood it's a good one. It's a trusted one, even by others that you would, emulate. And so I think as we think about that in financial services, there's been loss of trust by many because they haven't been treated well.
Yeah,
they didn't get the right product. They only had the product that was on the shelf. And, most of us will get what's on the shelf, but you're going to have more shelves. And I always used to say the people get a lot of attention in my world, the very low income, because our institutions work closely with the poor, and the very rich. They have bankers who give them lots of advice. Everybody in between, and including most of the Western countries, Europe and America, low income people get very little guidance. And it's usually only when there's a problem. With really important organizations like Citizens Advice Bureau, people like that. That's when you go. But people go there when something has already happened badly. The prognosis is already bad, by the time they went to that clinic. And it's because there isn't very much listening as they're developing their financial lives. And that could be students with debt. That could be students getting new jobs, also paying crazy rent. They're juggling all the time. And what's the consequences? And what tools do you have that might just help you to balance and make those decisions that you'll always have to make? And it may not be a solution for you, Sometimes it's just not enough money there. But do you have tools that help you as you juggle, as you make decisions? And I think it's just it's on all of us to be equitable and say we should have appropriate tools for people to live their financial lives, their ambitions, and when they need to have some security to fall back on.
I think there's one of the benefits maybe of fintechs is like being able to be nimble, being able to listen and just reacting to an increasingly more complex and intertwined world. Yeah.
And I think, fintechs will learn, like we all are. There are tools like AI, there are tools of those that identify us visually and otherwise. That can be very empowering, but we have to be careful that we also understand the consequences.
Absolutely, yeah.
Algorithms can help us make decisions faster, right? But an algorithm, which, can be very complex, is still a formula in the end of the day. And it's only based on the inputs it's given. So if you're not capturing enough information fairly and correct information, you get distorted views of people. And the algorithms, we're part of all our lives, from what ads pop up on your phone to your, how somebody perceives you as a good tenant or somebody who could be a good employee. We need to use these tools wisely, and fintechs can change and use them quite quickly. And I think they've been very adept at that. We just need to be sure. I often say sometimes there's somebody else in the room who's made a lot of mistakes before, just to help minimize the ones of a very energized and incredibly innovative group of people that sometimes run a new company.
We always use that in our pitches. We always say, our team has built 7 digital banks in the past. They've made all the mistakes, and now they can do something good here. So I think if you were to take a step back on your career, and what would be some of the achievements that you would highlight? Something that you've been, wow, this was really a kind of a milestone or something, or a certain institution that's done something that you thought was pretty cool.
I mean, I've been very fortunate. I guess I started early this journey with some real masters. Most of them were working from the non-financial sector, the non-banking sector, formal financial sector in the traditional sense. But they were really I learned to listen to them because they listened much deeper to people that I didn't have a natural link to, communities beyond my reach. But, it is a matter. We all try to look for intermediaries to guide us. I knew I wanted to go, but I wasn't exactly sure how to get there. It's like driving at night. I always say to people, you can only see as far as the headlights. Sometimes you've got to keep going and finding your way. And I worked with some very innovative people that gave me ideas, and they drew on me because of my understanding and familiarity and connections in the banking and the financial, international finance sector, capital markets, foreign exchange, hedging, institutions that have to be built and regulated. How do you manage all that, scale it? How do you hire and attract talent? And I think this was an unusual moment because I was very often the only banker in the room, in the sense of being a traditional kind of, boring banker type.
And how important was that expertise going?
Oh, it was really important. I think because what I realized was, if I wanted to work for Doctors Without Borders, Médecins Sans Frontières, something, I needed some clinical skills, right? I mean, as enthusiastic as I could be, I still, if I wanted to go to the field, needed to know how to do some things, medical or logistical, and I had been doing that. And a lot of countries, a lot of local, and I didn't assume that I would ever be the last mile, but I kind of knew how institutions worked. And I worked with institutions, whether in the Congo or in Indonesia or in London, in Venezuela, whatever, Brazil. I was comfortable with that. And I found I just had to have people and institutions with me that I could kind of make these links with, between sometimes the banking sector, the capital market sector, now impact investors, they may be called, and really innovative institutions that were not connected that way. So I think that was part of a transition from my full-time job as Senior Treasury Risk Officer at Citigroup and that type of thing, into actually making an added value to this journey of inclusion.
So moving forward then, you had many mentors along the way, and you've worked in many different roles in corporate non-gov, and so on and so forth. Who should we be looking to now to address some of the big challenges within the financial inclusion space that we have right now? And what might some of those challenges be?
Well, I mean, certainly we need to. First, we need to look at your governments and others and how we still have to advocate for this issue and for inclusion. But I looked when I was on this journey earlier to people who were older than me and more, had a longer journey and success in building all this. I think I look now to younger people for it's their moment, and they have the different tools that I didn't have, right? I began my career, I'm in Bahrain, we had a telex machine, right? There wasn't even a fax machine, and I'm not that old. But I look at people now and sort of think they have the concepts, the ideas, the technology to really take this to another level. They're listening to today's needs even closer. So in many ways, I think I look for the future. I look at it through the present, through younger people who in many ways are at another stage of their career where you might add value through your own experiences. But I think they have a longer runway to take this if they can continue to, understand the complexity of the world that they still need to engage with. Because while you might have an excitement around a product or a platform, technology, or a delivery mechanism, you still need to deal with, all the other financial services areas, the regulators, and the investment markets, currencies, and there are many things which you would want to be sure you're able to engage and have experienced people who can help do that. But I think I look to younger people and to youth to really direct this, because there's a much greater awareness than my demographic was in my career. Everybody thought it was strange that I was going off to do this. I don't think anybody thinks it's strange that you are. They'll probably just emulate it.
That's a really, really interesting reflection. Yeah, I think it is becoming a bit more of the zeitgeist as well. Everyone's just becoming a little bit more, conscious about the impact that one's job has and the impact that one's consumption has, and so on and so forth. So, yeah, I think unfortunately we're going to have to, wrap it up in a second. But I would, maybe in conclusion, I think we've touched on several points here of like what financial services need to be in order to be meaningful, inclusive. I think some of those would be that they should be values-driven, ethical, digital, affordable. I think it's a big one, and maybe quite a big challenge. Yep. If it's already costly serving the last mile customers, and maybe with all this other complexity that's coming in, like climate, difficult to ensure certain people.
I think you say that affordability is really important, and it should be in everything that anybody who provides services should be looking at that. But the ethical factor, the ethical issues is one which is really important too. When I was starting this, it was still at a phase where many people, they did negative screening of investments, for example. They took out investments in sectors, whether in arms or cigarettes or alcohol, whatever they didn't want to have exposure to. Today, and especially younger investors and others are asking questions about what has a positive impact. What are you investing in that makes positive change? Not that you're just not doing damage, but actually, can I be a part of that? Can I actually invest in things that generate wealth for others, or ecologically a beneficial climate? And the same with those who have faith-based requirements or interests, Sharia and others. That's ESG, because we may talk about it as a very new concept, or at least new vocabulary. Something like Sharia compliant goes back centuries of screening investments, and that has led to a lot of innovation in the type of things people can invest in. But it also led to boundaries in what they would and would not invest in. And I think it's just a good example of an ethical investment criteria that happens to be set through faith, and it's guarded through Sharia committees, and of literally a legal committee that actually reviews, a deal committee, to make sure this thing is acceptable. But we have similarly around climate and other ethical workers' rights, supplier, where is this goods coming from?
Transparency.
And all that. I really think that's why I'm much more optimistic about youth, because I think they're asking for this to be embedded in their products.
Yes. Yeah,
whether they're buying it in the shop or financial services.
I think that's a really good insight, is that, we're also coming to a stage where now I don't think it can be a USP anymore to say like, oh, we are environmentally friendly or we're socially responsible. It needs to be baked into the actual thing that you're doing. And what you see is that at the moment you can still kind of get away with, paying a premium, say for, you charge a premium because you're Sharia compliant, or you charge a premium because you are sustainable. But going forwards, these things will just need to be baked in, and should never have to compromise on the quality or price of what you're getting just to, in this case, bank or have your finance in accordance to your values.
And we see that, in food and products and others too, right? Most restaurants today, I go in, my nephew is vegan. I don't just have to go to a vegan restaurant.
No, exactly.
He can come to my favorite restaurants, but it's on the menu. He can make a choice, and still, we can be in the same place. We can share an institution because that institution is transparent, and it's also knows it has clients have different restrictions or needs or preferences, and that's the kind of thing financial services need to do. We know we need platforms to do that of scale sometime, but we need to be able to give each other choice and room. Why that is not so complicated, but it does require transparency and listening and knowing that you are really reflecting what people are saying they would like, and not saying that I need an app then that just does green finance, or one that just does ethical and whatever my definition is, but one where I can go and I can understand what you're offering and how does that really fit my choices. I have a choice then.
I love the food analogy. It's almost, financial services should become like a falafel or something, just.
Or like a very good restaurant with all those acronym, VGs, and for the vegans, the vegetarians, the gluten-frees. I eat everything, so it doesn't help too much. But it does matter that I can sit at the table with a vegan and somebody who eats gluten-free, and they're no longer asking 20 times about, can it do this, can it not do that?
Seamless,
do you have this?
High quality.
You're not making people constantly ask you for something or want to know it's not in there. And, that's existed faith-based boundaries, very often. But today we have it in other ways too. And it's simply about, synthesizing that, respecting that, and just make it transparent. You can make your choice then. Eat what you want, I don't mind. But I just want you to be sure you can choose while we're at the same table. And that's a big accomplishment if you can bring that many people to the same dinner table.
Beautiful. I think that's a great place to end it with. Thank you so much, Bob. Really appreciate it.
Thank you, Martin.
Thanks for coming.